In today's video, we're going to talk about the number one risk for stocks. It's not tensions in the Middle East. It's not tariffs. Now, before we come over and take a look at the number one risk out here for stocks, let's look at how the indices fared across the board. The Dow was up 275 points. The Nasdaq was up 96 points. S&P 500 up 31 points, with the Russell 2000 being up 0.34. We come over and look at advancing issues versus declining. We had 66.3% of issues advancing on the day. Then when we come over and look at the sectors across the board, we only had two sectors in the red: energy and consumer cyclicals. Every other sector was in the green. Technology today was the leader of the pack. And if we come over and look at the Mag 7 stocks, Tesla, Amazon, and Google were in the red. All other Mag 7 stocks were in the green today. When we come over and look at the Fear and Greed Index, right now we're sitting at 66, almost dead smack in the middle of greed. Now you may be scratching your head saying, Mike, why does stocks continue to go up? It seems like there's no way they can go down. Well, last night we got a little bit of good news out there. So we come over and look at what caused the markets to go up last night. This was a contributing factor. Was it the only reason? Probably not. But US and Canada to resume trade talks after the digital tax was dropped. So on Friday, Trump put out the threat that there was going to be no more negotiations and he was going to assign Canada their actual tariff. We saw the markets sell off in the late afternoon on Friday, only to start to recover. And then once again today, running up, making new all-time highs. Then we also got some more good news today. The EU will accept the 10% universal tariff from the US with exemptions. But then we look at the number one risk out here for the stock market. The stock market melt up may be the biggest risk facing investors, this strategist says. And what it basically goes on to say is, watch out, we could be in one heck of a bubble, and that melt up on the way up. If you're trying to short, watch out, you're probably going to get ran over. You don't want to be the last one holding the bag once the music stops. Now, this morning when we came in, we talked about this on the live stream, and it was the fact that the volatility index this morning was up. If we look at this on the 30-minute chart, we had a big gap up, but all the indices were also in the green. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But one of the questions I posed this morning is, who is telling the truth? Somebody is fibbing. Is it the VIX that is up? Is it the fact that the VIX is up, trying to make us think that there's fear in the market and we're going to get a pullback? Or is it the fact that stocks are basically running up on hopium, not realizing there is a lot of fear that could actually take them much lower? We see ultimately the VIX did come back down lower. The VIX only closed up 35 cents on the session, and compared to where it was, that is quite the pullback out here for the volatility index. We come over and look at crude oil, basically forming another doji candle. We've had that big push down, and now crude oil just basically going sideways out here. Something not going sideways, however, was the dollar index. The dollar index continues to fall lower and lower and lower. Now, who do you think benefits the most with the falling dollar? If you went ahead and said gold, well, congratulations. Gold coming down near that trend line that we've been watching, bouncing once again. So now is gold going to go ahead and try to make a run back up towards all-time highs. However, when we come over and start looking at the SPY real quick, we see the SPY today closing with the doji candle. But I do want to remind you guys, if we come over and we look at the SPY on the weekly chart, then we simply turn on the 9-count sequence. We can see that last week, we actually closed the week out with a 9-count. That is a sign of exhaustion. It doesn't mean the market has to flip right here, right now, but it is a warning sign that we most certainly do want to pay attention to. So as we come back over and look at the daily chart, now we were talking in quite a while about this rising wedge pattern that we had. We basically broke out from it. However, we never got any continuation with this trading pattern. We basically went sideways. Then the market went gap, 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 gap and away. We come over and look at the 4-hour chart real quick. This is starting to get way overextended. However, it doesn't mean it cannot continue to push in that direction. Then as we come over and we look at the 30-minute chart real quick, notice today we closed with a doji candle, but once again, we gapped up. We failed to come back and close that gap. Now, it seems like every single day the market only goes up. And it's not just that we go up, but we also, most of the time, we have been opening up with a gap up higher and not even coming down and filling those gaps. Look at the MACD indicator. Once again, we make a new all-time high, but look at the MACD indicator. Is it confirming that push? Absolutely not. Now, if we look at the volume profile, if we're below value area high tomorrow, I do want to look for the market to come back down, potentially fill the gap from today, and then see if we can get that pullback underway in the very near future. Now, to make you guys aware, starting today, Take Profit Trader, 40% off all their valuation accounts. Best yet, no activation fee. To take advantage of this offer, use the link in the description box down below. Use promo code epitome at checkout. When we come over and we start looking at the futures markets real quick on the 4-hour chart, look at this candle, quite the large wick on top of this candle. Now the question is this going to be the beginning of a pullback starting to get way? Something we've been talking about on the live stream. On the 4-hour chart, grab your Fibonacci retracement, pull it from the swing low all the way up here to the swing high, and notice where the 38% retracement comes in. It's going to be all the way down here at a price point of about 61.48.5. Now, that would be a minor retracement if the market's going to continue to melt back up. Now, I'm not saying we're going to make a straight beeline right down towards that area, but this could be a target that could take one day or several days to work down towards, but nonetheless, it will be a high probability target. If we can breach below this high volume node right here at about 62.31, then that's going to open the door towards the next high volume area, 61.88, and also right near the high volume area of the weekly profile at 61.92. Now, notice at this point in time, we are still currently trading above last week's value area high. So once we get below value area high and below this area, that's going to really open the door to those lower prices. If we cannot get below either of those areas, the high volume area of the profile or value area high, there's no need to really focus on sell side trades. Coming over and look at the daily volume profiles on the 30-minute chart, notice where value area high is. We closed just right below it. We actually wicked above it, came right back down, 62.51.25. Then we have the point of control down here about 62.38.25, with value area low being about 62.32.75. So tonight, if we stay below value area high, then guess what? I want to target the point of control. Then I want to target the value area low. Then let's not forget Sunday night, we gapped up higher. I do think this gap is likely going to get filled this week. Keep in mind, the trading week this week will be shortened due to the holiday. Now, if we come over and look at the economic calendar for tomorrow, what is actually going to be on deck? We can see tomorrow we're going to be hearing from the man himself. Jay Powell will be speaking at 9:30 a.m. Then at 10 a.m., we get the ISM manufacturing PMI, along with the JOLTS job openings, and then ISM manufacturing prices as well. Other than that, it's going to be very light on news. However, when we come over and start looking at Thursday, not only are we going to get the NFP numbers, we're going to get the weekly unemployment claims, along with some more ISM numbers throughout the day. So this week, we do have the news that could be the catalyst to move the markets. But I do want to warn you guys, regardless if we're looking at any type of bearish pattern in this market, regardless if it's the 9 count that we saw with the S&P and Nasdaq, or the daily chart forming this doji-ish looking candle, keep in mind, at the end of the month, in the beginning, typically that tends to be a little bit more bullish time for the market. So let's trade what we see, not what we think. Notice today we gapped up higher on the Nasdaq, but then as we come over and look at the 30-minute chart, you see the big gap up. We consolidated, we tried to push down towards it, we rejected and ran up and made a new all-time high. But look at the last 30-minute candle. Does that look bullish? To me, it does not. I think a pullback is warranted, and a pullback would be healthy if the market wants to continue up higher. If we look at the MACD indicator, look at the peaks. We are clearly making lower highs every time price continues to push up higher. The MACD indicator just simply is not confirming those new highs. Now, we come over and look at the 4-hour chart real quick. Look right here. We already had the Fibonacci retracement drawn out, and we need to go ahead and extend it out a little bit from this afternoon's push. We had zero pullbacks in this market going all the way back to the following Sunday. Now, at some point, the market will pull back to the 38% retracement, but I want to warn you guys, if the market makes a new high, we'll simply have to grab the Fibonacci retracement tool and continue to move it up higher. There's not enough evidence that right here, right now, the top is in and we're about to pull back. If we can get below value area high from last week at 22,816.75, then I do want to target some of these high volume nodes on the profile, then maybe down here towards the 38% retracement, which is very close towards last week's point of control at 22,420.25. Now, when we come over and look at the daily volume profiles real quick, notice today we did not hit the P point, nor did we take out the point of control from Friday, nor did we go ahead and fill the gap either. Now, if we look at the volume profiles, we can see that value area high is right up here, about 22,871.00. Then the point of control will come in about 22,820, with value area low coming in at 22,806.50. So if we start breaking tonight below value area high, I then want to target the point of control. I then want to target value area low. I then want to go ahead and see, can we run all the way down, fill the gap from Sunday night? Keep in mind, if this gap is not filled by Thursday's close at 5 p.m., it's highly probable it'll be several weeks before we come back and fill that gap. Now, if you guys would like to learn about the different day types and volume profile, then you want to make sure to check out this next video right here.